Good Friday, everybody. This is Joe Cusick, VP of Wealth and Asset Management for Money Block and Trading Block with your traders exclusive for Friday, September 11th. First and foremost, the medium trend continues to be to the downside just because of the technical damage that was wreaked in August, and we still see that now being put into play again. In the short term, while we saw an attempt at a bounce earlier this week, we haven't seen that damage from August, late August and early September really been undone. Short term, if you take a look at the small caps, that's where we're going to keep a pulse of both what's going on in the economy and these smaller domestic stocks here in the United States. And in the tech area, we're going to keep a look on that. They've both managed, these two sectors, and large cap areas and small cap areas have been managed to exceed their late August highs on Wednesday's open, but they have these technical patterns. They're called rising wedge patterns. Really right now what we're seeing with the action today with both the NASDAQ, the S&Ps, and the Russell all down, you see that they're challenging the bottom part of that rising wedge patterns. Now these patterns typically are going to be short-term uptrends, and with the action that we're seeing today, we're seeing that unless we get a bounce off of these levels that they're at right now, these breakdowns could be a signal of continuation to the downside. Specifically, if you're looking at the S&Ps and take a look at the ETF, the spiders, watch that 195 level on the upside. If it can't break through there, or if it breaks the 192 level on the downside, and that's the critical level, 192.50 level is going to be a level of which broken. That means we could see a continuation to the downside and a challenge to new lows, and maybe even the August lows. Taking a look at the NASDAQ, we saw that oversold bounce this week. The rising wedge is still in play. It is, though, bearish action in there today. Watch 101.50 on the Qs. A break there, again, would be negative. In the Russell and in the small caps, take a look at IWM. There's an interesting engulfing candle that we saw, a bearish engulfing candle on Wednesday after the action to Thursday and today. A break below 112.50 on the IWM would be negative. And this is one of those offensive sectors that if you see that it starts to break and starts to have velocity to the downside a lot more quickly than our large cap brethren, that could be a signal for some more continuation and more volatility in the market. 5 large cap names that we want to keep an eye on that are going to give us a pulse for the overall market, especially for the large cap indices, both tech and the S&Ps. Watch Microsoft. A break of 42.50 would be bearish. Cisco, a break below 25.30, that would be bearish. Comcast, a break below 55.50 would be bearish. Apple, a break below 107.50. And finally, taking a look at a finance name, Chase, JPM, a break below 60.70. That would be bearish for JPM and could be signaling some more bearishness and some more volatility in that sector being finance. Well, that's it for this Friday. This is Joe Cusick, VP of Wealth and Asset Management from MoneyBlock and TradingBlock.com, wishing you a great weekend, and we'll see you next week.